Good morning and welcome to Market Wake Up as he just takes a sip of his tea. I hope you're all having a fantastic day. My name's Jordan. This is John, and you are watching Market Wake Up, where we're going to get you up to date with everything that you need to know ahead of your trading day. And today I've got a surprising one for the big bite today. I am going to blow everyone's mind with a new trade concept, a trade idea. And I'm going to leave you with this. Interpret any way you want. I'm talking crack. Let's get into it. Market Wake Up.
You're talking what, George?
Good morning. You heard me, right? We'll get into it when we get to the big bite. I'll share what I'm talking about. But in the meantime, good morning to everyone jumping in on chat. Paul's already in there saying good morning, one and all. Musclay as well is coming in saying good day. Guys, it's so good to see you again. So make sure if you are tuning in, I'm waiting to see everyone else flood in as well. If you do have any questions or anything you want to chat about throughout today's episode, use the live chat. There's a reason we're live, and it's so you guys can be a part of this content with us. But John, good morning to you. How you doing?
I'm doing good, mate. I took 2 trades yesterday.
Ooh, welcome
Can you
back.
believe this? This is the long time since I've took any positions of what it feels
like.
like.
They're both going to lose.
I know they both won overnight as well. Overnight as well. I was like, yeah, I'm back, baby. That's what I said. That's what I was like. I was like, felt like it's been a while since I've traded. Obviously traveling here, there, and everywhere. I don't like to trade when I'm traveling or anything like that. There's an odd occasion where I'll spot something and think that's a bit too hard to ignore, and I'll jump on. But I feel like when your mind isn't in it, you shouldn't be in it either, right? If you're not 100% there, you shouldn't really be there. So yeah, I took 2 trades yesterday. Unfortunately for you, they were both Australian dollar short positions. One was a Aussie US dollar short, and the other was a pound Aussie long. So I did expose myself to the Australian dollar a little bit, but I was fairly confident. So yeah, kind of matched up, aligned with everything that I look at. So pulled the trigger on 2 trades and ended up with 2 profits. So I woke up this morning and I was on cloud 9. I woke up early, really early, to check the positions. I was like, let me check this because I know
That's how you know you've been out of the game.
Yeah, gotcha. Because I know the RBA meeting minutes were coming out. You see.
Yeah.
So I was like, I'm both in Australian dollar positions. I need to check on those. And fortunately for me, that obviously went in my favour, and that's the reason why they kind of spiked into my TPs in the end. So I was quite fortunate there in that sense.
Yeah, I mean, commodity currencies are continuing that kind of downfall we discussed, which is matching also kind of the VIX too, which is quite interesting. But welcome back into the game. I'm glad you felt it. I say welcome back. I don't have any open positions right now, but I want to, and I'm going to talk a little bit more about that a little bit later on because I keep contradicting myself. But I found what I want to do. I've given you my October trading plan, right?
Yeah.
This contradicts one of those positions, which is interesting. And I'm going to show you how quickly you need to adjust your analysis in the macro world and how much you cannot hold on to a bias. You've got to just be flipping and changing. I'm showing a prime example because I'm flipping and changing every 3 days. So this is either I'm going nuts or I'm onto something. But nevertheless, I'll share that with you a little bit later. Market leftovers, you already mentioned it today. We had the RBA meeting minutes, which, to be honest, didn't really amount to much. We did find a little bit of weakness in the Aussie dollar, but nothing that wasn't felt across the whole market anyway. Is there anything leftovers, like kind of overnight, that you read into that piques interest in trading? Is there anything in chat, guys, that you guys saw last night? Because for me, I mean, it was like waking up on a Sunday.
Yeah, the only thing that I've seen overnight, and which is why we're seeing a lot of sort of pressure in the sort of stock markets at the moment, and especially in the likes of the commodity market, there was the lack of stimulus again from China. That's been a big headline that I've seen. Again, I haven't looked too much into it this morning, haven't had a chance to yet. But a lot of that talk is, again, kind of focusing on, okay, so we had the sort of stimulus when it comes to the housing market and the situation there. but where's the stimulus for actual like for consumption? Basically, where's the stimulus for that? There hasn't been any. They have said that they are progressing towards their targets, whatever that means. So yeah, there was a little bit of a disappointment overnight. I feel that China haven't again stepped up and provided more for us. We're actually seeing the Hang Seng, I think, drop about 7% overnight. We've seen some commodities, like I said, peel back a few of those gains as well. So that's the only thing that's kind of picked up from my end that I've seen. Obviously, there's also been more talk about Iran getting back involved and some more sort of missiles, I guess, firing over into Israel is on the cards at some point. So that's going to obviously feed very well into what's going on into your big bite today, because it's that.
Right, is it?
Well, I hope. Well, I don't know. Maybe. I think other than that, I've not seen much.
The only thing that really is going to widen, like, that we should care, once again, trader perspective, that we should care about with that conflict is Iran, Israel. I think the everything kind of around there, it's settled, it's priced in. That's what caught people off guard. That's what might catch people off guard again. Excuse me. I did also notice we had a comment yesterday where someone was chatting. It popped in front of my head and then it just left my head at the exact same time. We had a comment where someone was asking about the NFP surprise reaction, and that might allude to what people think with a delay of the interest rates coming in into where people are positioned. And I found this interesting because I didn't agree with the analysis, but it thought-provoked me. And that's what I love about analysis, because I think that surprise result in NFP and then the reaction we had in the US dollar from that shows you exactly where everyone is positioned. Because that surprise and then the reaction from that surprise is their trades unraveling. That is them panicking to get out, right? Yeah. They're over leveraged in a certain direction. So what that actually did as for us, shown us where everyone was over leveraged and where everyone was trying to push this, and the NFP surprise has shown that unravel. That's shown that all that position previously, that's where people want it. Now, the question is this the once off? Or is this something that's going to be sustained? If it is a once-off, well, then you can get back in with all those others that are positioned that way and wait for another surprise and capitalize on that. But I found it so fascinating to look into that, because that price action will tell you the story. And because it was a surprise result and it did go opposite way, that shows you where minority people are positioned. And I think that's just an awesome thing to have a look into.
Yeah, 100%. I think you hit the nail on the head there. This is where we were talking about where's the risk for markets right now. Where are they? I feel like they're over leveraging into equities a little bit. I mean, I just looking at the price action in equities, it does seem a bit ropey for me. But how many times have we seen this in the past where we've seen sort of consolidations with the highs and then it rips into all-time highs again and rips for like 3 months? So, it's very difficult to call a market top. So I don't want to necessarily go against it, but I don't necessarily want to be in it either. And that was a similar situation that I was feeling with the US dollar. I did back dollar yesterday, but against the Australian dollar. And again, that was a play on what I saw in the COT reports, what I had a feeling around the VIX as well. I was like, well, if volatility is going to rise, we should really still consider where the market's seeing the safe haven, right? Flowed a bit away from the yen right now. The yen is not necessarily where that flow is at the minute. Swiss franc a little bit, that flows there, but just not against the US dollar. But again, from the Swiss franc idea, don't really want to be a buyer of the Swiss franc. So where does that leave you in terms of a safe haven currency? Kind of leads me a little bit more towards the dollar in that sense. So that's kind of why I backed that as well yesterday, because I was thinking about risk off.
I mean, do you save? That's a tough one, right? Because I agree. I don't know where I consider safe.
That's
I'd lean towards those commodity currencies, but they're underperforming. So it's like, well, you look at the US dollar, but then you're safe. The reason you go into the safe haven asset is to unexpose yourself from the US market. and you just get straight back into the US market to do that, which is an interesting conundrum that we find ourselves in, and that's what's fascinating. And I think that's probably our most exciting thing to chat about recently. But let's get into Freshly Squeezed. Let's have a look at where things are priced today, this morning, waking up and getting you guys into the chart. So I'm going to start off with the VIX because it's very obvious. We've seen upticks, 22.78, and we are looking to break that September high, which is where we had that little push at the beginning of September, if you remember rightly. We are looking to try and break up that high that's in and around that 23.8 and see if we can get a little bit higher. That does tend to move with a fear index. So usually if the VIX is climbing higher, it means people want to go risk off. They want to go safe haven. Where's the safe haven? Once again, we talked about this, right? But that is an interesting thing to be noting. Let's get through prices. The FTSE is down 1% pre-market. The Nikkei is flat. The Oz 200 is down 0.35%. The S&P 500 is flat. Moving into some of the commodities markets, we're looking at coffee down 3.4, oil down 2.2, gold down 0.6, silver down 1.7, sugar down 0.6. The Aussie dollar is down 0.45, continuing the move from yesterday, which John managed to benefit from. The euro is up 0.11. The pound is flat. The US dollar Japanese yen's down 0.4%. US dollar CAD is up 0.2%. And US dollar Swiss franc down 0.07. Bitcoin and Ethereum pretty much unchanged. There's your prices for today to get up to date. Anything that you want to know moving forward today, John?
Not really. There's not a lot going on. I think the only thing that we can probably touch upon is there's some Fed speeches coming out today. We had some Fed speeches last night, and they were pretty much backing up the case with a 50 basis points cut, but more on the side of as an insurance to if we do see a slowdown in the economy. Apart, what they are actually quite worried about in terms of what this Fed speaker was suggesting was that inflation could be back on the cards again. So they don't necessarily want to cut it's this such a fine and mixed messages from individual
you don't
members.
Want mixed messages from the central bank. You don't want mixed messages.
And I think that's where a lot of the worry is at the moment, isn't it? It's like what is clear. There's not really a lot of clear guidance from the US at the moment. This is why we were kind of saying in our recent streams that in the US market is a little bit of you don't know what's going on right now, and that's the hard thing about it. So if I was gonna, or like I did trade dollar yesterday, it's very, very short term moves that I'm looking at. I don't necessarily want to be invested in the dollar long term at the moment or mid term in any way, shape or form. I want to be looking at sort of other markets which are a little bit clearer in my sort of perspective. Euro, my feelings around the euro. I feel like that's a good market to focus on, so that's where I'd like to be focused in a little bit more. Pounds, I still quite like the pound. Although Governor Bailey came out last week and started to talk about, yes, we can aggressively cut interest rates, not got the data to back it up. So he just kind of said it as a thing to say. The market then reacted. I mean, this comment which came out in a article in The Guardian, when that comment was released, I think pound dollar dropped about 30-40 points, or pips, sorry. And then the market kind of gained a little bit of traction on that reaction. I just felt that was a little bit of an overreaction because they haven't got the data to back it up right now.
Yeah, I think looking at ahead of today as well, you got two trade balances, the US and the Canadian trade balances coming out, which will be interesting to see. We know global trade is under scrutiny at the moment with people threatening different sanctions and all the other fun stuff and conflicts that are out there. So I am curious to see where the trade balance of the US does sit. Any surprises, I think, will affect currencies in and around that as well. It's not necessarily in today's trading session. It's late tonight, but it's before our next market wake up episode, which is tomorrow. RBNZ's 50 basis points is are you solid with going with 50 basis points? I'm hearing mixed messages. I'm getting some people tell me 100% we're going 50. I'm getting some people tell me 25. You did the safe bet with the Fed. What are you thinking with the RBNZ?
I know, what do I go with now? I feel like my record has been tarnished with talking about different types of central banks and how they're going to cut rates, because pretty sure I've got every single Fed one wrong so far. So I don't know. I'm just going to go with what's expected and then see what happens, I guess. 50 basis points sounds... I mean, the market looks to be pricing that in. If you look at the Kiwi across the board, we're seeing a lot of downside in that market right now. So I've got a feeling that maybe the market is pricing more of a 50 basis points cut at the minute. I haven't actually looked too much into the Kiwi, what's going on there, RBNZ. The last time I actually looked, they were doing all right. So I don't know what data's come out since then to change that and warrant that. So I'll have to do a little bit more digging into sort of what's going on over there. But I know growth's not been particularly fantastic. But...
yeah, I mean, and dairy products find a tumble into Christmas time as well, which actually I found really funny, because milk, if you look at I think it's CO exclamation mark, which is the Mark III milk futures, seasonally really weak from October into December, like really weak. So you'd expect the New Zealand dollar to be weak. Strong, seasonally strong between October and December, and I'm like, that is fascinating. Why is the number one export? They do 35% of the whole world's dairy, New Zealand. That's their biggest export, and when those prices drop, the New Zealand dollar gains demand. Riddle me that one. That doesn't make any sense to me, but I found that fascinating. Without further ado, let's chat about it. I planted the seed. I got you excited. You're a little bit confused. You're a little bit worried. We're going to dive into the big bite for today, and we are talking the crack spread. I'm not joking.
I kind of got worried at the start of the show. I was like, is George telling me that he's moving away from this industry and he's going to just become a drug dealer?
The risk to reward, John, is... I'm talking the crack spread. Are you familiar with the crack spread?
I'm not familiar with the crack spread.
Is anyone familiar in chat with the crack spread? The crack spread. I want to talk about it. The cracking, right, is the process of taking crude oil and refining it into gasoline, diesel, heating oil, you name it. It's called cracking. Okay, the crack spread is essentially where you get a spread of prices between what the finalized refined product is and what the underlying crude oil price is. Okay, this spread usually and seasonally gets quite wide during October into late November. Okay, and the reason that is because we go through what we like to call, or what the US like to call, refinery maintenance. Okay, same time every year. Yeah, majority of the refineries, I'm not gonna result to Barry's comment there. Majority of the refineries in the US go through their maintenance periods, which means they stop buying crude oil because they're not running their machines. They're going and maintaining them, they're making sure they're all right. And that's what leads to a seasonal drop in demand of crude oil, because all the refineries across the US go, nope, I don't want to buy any. You will find a good way to track this is oil inventories in the US, which is produced, I believe, weekly. Oil inventories are announced. They might be bi-weekly. Someone correct me if I'm wrong. They actually increase during this time. It's just because the demand for the product's not there because they go through maintenance. Now, the easy way to capitalize on this is to short crude oil. Seasonally, it's good, right? We know that it's pretty strong. We can expect that they're going to go through maintenance period and crude oil is going to be less in demand. That carries a lot of risk given what we've spoken about recently, given the Middle Eastern war and different effects. Do we want to be shorting crude oil right now? I'm just not sure. So I've been exploring the crack spread as a trade idea, which is a way of essentially hedging this trade idea, this refinery maintenance trade idea across a number of different assets. Okay, welcome to the crack spread. The crack spread is where we take crude oil price and we minus the heating oil price. Now, heating oil as an asset is incredibly difficult to get your hands on. All right, you've got to go through some elaborate exchanges and trade some funny old products in order to be shorting heating oil or be involved in heating oil. Now, I know also our audience are predominantly CFD traders, so this is just not the spot to be. So I've made it actionable. I've made it actionable. My play here is to be exposed to short side crude oil. It's to essentially get in charge or in front of this refinery maintenance where crude oil prices drop, but the output product doesn't.
Right.
So the margins of the companies that refine it actually increase. Right. The way to usually play it is to long something like heating oil, which is a refined product, and to short crude oil and hope that that spread gets bigger. It's okay if they both lose value. It's okay. As long as that spread is bigger. That's the trade. Yeah. I don't want to be trying to find a way into heating oil, to be honest. That's just ridiculous. To give you a bit of an emphasis on what I'm doing here, here's the seasonal trade with WTI crude oil. You can see between October and December, it drops off a cliff. Okay? This is that refinery period. So I've got one half of the spread. I want to short crude oil, but I don't want to be directly exposed to it because I'm worried about what can happen. I want to find my heating oil replacement. I want to find something that is refined post crude oil. So those margins increase, those companies are going to earn more money. So I'm looking to US based equities, and that's where I'm going. So part of the position, the beginning, this is going to be a little complicated. So stick with me. Remember, we're trading a spread here. Part of the position is shorting crude oil, normal stop loss, normal take profits, your general trade management style. That's half of the position, half of your risk management. The other half is going to be split into two companies, okay? One of those being Valero Energy, right, which do a lot of the refining products post. And the other one is Marathon Petroleum. It's in the name. I shouldn't have to explain what petroleum is or what it does. I think we all know. But that is also a refined product from crude oil. Now, what you'll see from both of these assets that I've shown is the seasonal play from October to November is really good. Yeah. I mean, we're looking at Marathon here, 76.9% win rate over the 13 years they have been listed with an average return of 9%. If we have a look at Valero, we can see a very similar thing, 72% over 25 years with an average of 4.26%. That combined with our shorts on crude oil to try and get an average of 8.2% with a win rate of 64, so it's not as good. And that is why that's part of the reason we're hedging here. But that is called crack spread. Okay. It's the process of cracking oil. All right. It's the before and the after. I think the before is going to drop because the demand for the product is going to drop, which is going to increase the margins for the after because their expenditure is going to be cheaper. And I want to catch the drop, but I also want to catch the increased margins. And that is how we trade a spread. So my one trade idea is actually involving 3 different assets and 3 different positions, but it's all in one trade. And that is my crack spread. I'm looking to go for that this October.
Okay, so you would go and trade these normally as you would on a CFD platform, or would you go into this?
For crude oil, yes, happy to go on a CFD platform short. For equities, I would go real market. I'm not a big fan of leveraging and stuff in the equities market, so I'd go real market and buy the shares for those companies. But for the crude oil CFD based, yes.
Okay, I like it. My only obviously worry is the situation, global situation. If it does heat up,
which
in the pun,
I think. I agree. My risk management strategy there is the closer we get to that heating up, or the more worrying that looks, the more weight I put towards Marathon and Valero. So I'm still exposed to the crude oil downside if it wants to go down. And if these events don't happen, because as companies, if the crude oil prices go up, they're going to pass that on to the consumer. People are still buying petrol. People are still buying heating oil. People are, that, especially moving into winter in the US, those products are still going to have a lot of demand. So if you wanted to go real safe, you could look just straight into something like Marathon and something like Valero and be less exposed to the crude oil downside. But given this analysis is based on that, I also want to be exposed to a little bit of that to that downside, and then vice versa. If crude oil or the Valero marathon decide not to perform, and crude oil does still drop regardless. Like there's multiple avenues you can make money in this one trade. It's not linear. You're quite dynamic, and that's what I like about it.
Yeah, I like that a lot because you're not necessarily going to be too exposed to that headline risk if you are within the stocks rather than just in crude oil on its own, which is super interesting.
Which is a spread there, right? Yeah. That's the point. The one analysis, one play, multiple ways to play your hand, and I'm playing 3 hands of poker at the same time, but combining the risk into one. It's something not a lot of CFD traders look into. No. It's something that a lot of traders in general look into, but being more dynamic. You've got your analysis. It doesn't mean you have to say flip a coin, either lands heads or tails. That's the result. This is one where you can expose yourself to that result in a number of different ways.
Yeah, no, I really like this because, like you said, I think even for myself, I don't do that enough, right? I see, like, I use analysis to trade currencies and commodities and whatnot. I'm not big into the stock market game at the moment, so it's interesting for me. That's definitely something that I'm going to look into. After this, I'll go take a look at that because that's something that I need to expose myself more to, is using the knowledge that we have in that space to then go and diversify into something else to gain benefits from something, even though there is that headline risk. So I really like that. I like that a lot.
There you go. There's Jordan's crack spread trade. If it's the first time, it is a very common thing. It's just not well known in the retail audience. If you Google crack spread, they will talk about the difference between the finalized product, refined product, compared to the cracked product, compared to the uncracked product. And those spreads do tend to widen in and around these maintenance levels, which is what we're walking into now. So I thought I'd present that and share that with everyone, and hopefully it'll expand your minds a little bit in a way to think about making money in the markets.
Yeah, I like it. I was going to actually also kind of talk about oil in a little bit of a way, because of kind of what's been going on. We had a long signal, but I also just wanted to remind everybody how it can impact sort of the United States inflation rate. Especially back in sort of 2020, we had a really close correlation between rising oil prices and inflation in the US. Obviously, that oil price has kind of ranged for a while now, which has also kind of led to that inflation rate in the US ranging for a small period of time. We are seeing inflation break a little bit lower because obviously there are other things that impact inflation. It's not just oil, but we are starting to see a little bit of a rise in oil. That's why I think there's an interesting play at the moment, why people are thinking about the idea that obviously if this war intensifies and we see an escalation and oil prices do kind of go a little bit berserk. I know you said yesterday that OPEC were kind of looking at the gang think that we're going to see oil prices up at sort of $90 a barrel. That's interesting considering how that plays into the hand of global inflation as well. Does that then kind of, is this the period of now? Are we going to see, okay, we saw 50 basis points from the Fed. We've had good labour market numbers. Is this another factor that they're going to look at to think, okay, maybe we won't go aggressively again? Just something to think about, just food for thought. When it comes to sort of looking at future inflation rates, when we've got inflation data coming up soon, so maybe have a quick flick over to your oil prices, see how the market's been impacted in that sense. If we have got higher oil prices, you can expect maybe a slight uptick in those inflation pressures, and then the conversation comes back around of, are they going to cut aggressively or not? That's what we're in at the minute. So yeah, just something to take into know. Also, I was looking at other kind of seasonal patterns, and nat gas, really nice seasonal pattern, which performed really well through August and September. 92% correlation with an election year, 90% over 20 years, 91% correlation over all years.
So nice. Commodities are real nice for seasonals.
And there's a potential other little uptick here. The only fear that I have with this has gone a long way. This has gone a long way already. I mean,
it's gone the same distance it would in the past.
Yeah, so it's done about 35% upside, which is what I was looking at. So it's got a little bit more into it, I think.
What I find so interesting about nat gas, because I like trading nat gas. Is the absolute sell off it gets in January, like post winter. When you get out of winter, nat gas just drops off a cliff, and I absolutely love that. Like it's a trade that I've taken many times before, and I do enjoy that. Just before we part ways with everyone in the audience, guys, let us know how you enjoyed today. By the way, give us a message in the chat. Let us know if you're enjoying it. We started doing something. We got a little bit creative. We got a little bit fun. We let our creative side get aside. If you're on our YouTube channel, Market Wake Up, right, youtube.com/Market Wake Up, and you scroll down, you will start seeing that John and I have started creating shorts, and we're being creative. We're not. All I'm going to say is go watch John's short, right? Because it tickled me so much. Like I sat there last night. I've watched it about 18 times, and I was just giggling like a little girl. So. Head over there, Market Wake Up on our YouTube channel. Watch the most recent short, and I guarantee you'll enjoy it. Leave a comment. Let us know what you think. Help us get this to more people, because that's what we want. We want to be able to do this full time. This show really out there. The shorts are very well done. Thank you, Musk. I appreciate it. It's self-made. We just had some fun. It has been fun to actually create them. We want to make sure the Market Wake Up gets to a point where it can self-sustain itself. So we're able to do this every day. So if you guys can show us some support over there, give us a comment, give us a like, we greatly appreciate it. And in the meantime, let's come back tomorrow to do it all again at 8:30 a.m. British Standard Time, shall we?
Let's do it.
Let's do it, guys. Take care, trade safe, and we'll see you in the morning.
Cheers, guys.
I can't.